So the European embargo on Russian energy supplies is going to go into overdrive during the coldest month of the year.
Yeah, I feel like I did manage to get away from my initial skepticism and end up embracing the mindset of like, great, gonna like go out and look for like whatever like the weirdest, dumbest thing people are talking about today, and like that's gonna be the thing I'm working on today.
Well, hello there, my friends. Rafi here from the Endgame Investor with this week's Silver Report for Arcadia Economics. Winter. It's coming for Europe. And in February, the EU is wisely tightening its embargo on Russian energy supplies. Germany is scared of cutting its citizens off from cash during the inevitable blackouts that are going to come from this embargo on Russian energy supplies. But you know what's more scary than a German without access to cash? A German with access to wheelbarrows of cash. We're going to talk about Sam Bankman-Fried, whose name is hyphenated, and it's Bankman-Fried. If you don't believe in messages from above, when you hear a name like Bankman-Fried, you're not listening. FTX and Bankman-Fried were the tip top of an ongoing pyramid. The base of that pyramid itself is silver. And as always, this Silver Report is brought to you by Fortuna Silver Mines, symbol FSM, which last week released results on November 9th, and they were positive. Looking at the technical action of this stock, what we see is that it has broken through the 50-week moving average for the first time since April 2020, which was the huge silver run from March 2020 through silver squeeze, where silver hit a high of about $30. Are we on our way back there again? Maybe not imminently, but we're looking through the coming winter when diesel supplies are going to be very, very tight. What do you think is going to be happening on the streets? Currency is going to be dumped. And when that happens, the precious metals shine, even the metals that are underground and still in ores. And so if you want exposure to a good mid-tier miner, FSM is a good choice to make if that's the exposure that you want. We begin with an article from the FT, the Financial Times. U.S. diesel and heating oil stocks scrape lows before winter. You're not supposed to scrape lows before winter. You know, back in the time when the harvest was in the spring and the harvest had to bring people through the winter, which is why bears hibernate and other animals hibernate. So your food stocks are supposed to be the highest before winter. Your oil and your energy stocks are supposed to be the highest before winter because you're going to be burning extra oil in the winter to keep yourself warm, unless you're in today's world where you're not going to do that because of climate change or whatever. I find it very ironic that in a time where everyone is crazy about climate change, which by they mean global warming, and people are going to freeze to death because of global warming, but that's just the world we live in, all right? Here is the key paragraph. The contraction of diesel stocks comes amid steady demand and rising exports to Europe to offset now sanctioned supplies from Russia. Pressure on U.S. stocks is expected to worsen in the winter when European sanctions on seaborne Russian crude oil tighten in December and are extended to refined petroleum products in February. And so the European embargo on Russian energy supplies is going to go into overdrive during the coldest month of the year. You have to ask yourself the question, is this intentional or is this just complete and utter idiocy? Well, in a way, I believe that it's both, because the people that are in charge of these policies are so power hungry that they believe that when the currency collapses, the base of their entire power structure, when it collapses, that they can make a new one out of absolutely nothing. And from there, they will rule the world. However, that is impossible. People run out of money. And when people run out of money, it's the real money stackers that suddenly have it all. And they redistribute wealth by buying things and forcing a real money circulation once again, which is why we are silver stackers to begin with. And here we have another article from the FT Financial Times. IEA, International Energy Agency Administration, assholes, I don't know, warns surging diesel prices risk worsening European energy crisis. Well, yeah, here's the key sentence. Once an EU embargo on imports of diesel and other refined products from Russia is implemented in February, the coldest month of the year, the market will tighten further, it added. Winter is coming in Germany. This is from Zero Hedge, November 16th. Germany preparing for emergency cash deliveries, bank runs, and aggressive discontent ahead of winter power cuts. Aggressive discontent would be a great name for a German rock band. It says Zero Hedge, as Reuters reports, citing four sources and several years ago, German authorities have stepped up preparations for emergency cash deliveries in case of a blackout, or rather blackouts, to keep the economy running, as the nation braces for possible lower cuts arising from the war in Ukraine. The plans include the Bundesbank hoarding extra billions to cope with the surge in demand, as well as possible limits on withdrawals, one of the people said. And if you think crypto investors are angry when they can't get access to the digital codes of the bankrupt exchange, just wait until you see a German whose cash has just been locked out. You know what's scarier than a German whose cash has just been locked out? A German whose cash has just been locked in. These are Germans 100 years ago bringing crates and crates of cash into stores to buy anything that they possibly can. And now let's go for a minute into the crypto universe, where a guy named Bankman-Fried just ripped off people for about $26 billion. So the point of this exercise is to scale out and to see the structure of the money pyramid for what it is. You see, in the days before the collapse of FTX, what was happening was that people with the crypto keys who knew how to steal them with the private keys, those long codes that you see, they were simply taking the stuff and moving it into their own private wallets. So you see this article from, what is it, Verge or something? That says FTX says unauthorized transactions drained millions from the exchange. The bankrupt cryptocurrency exchange moved users' funds to cold storage after at least $473 million went missing from the platform. And so I don't want to get too deep into FTX and the fraud that it committed, but basically it's the same as the entire banking system. You see, they stored cryptocurrencies, which have a market value, but then they loan them against their assets, and they operate a fractional reserve scheme at about 100 times leverage it was. And then what happens is, when a bank run starts, whoever has access to the actual assets will steal them and put them in their own accounts. So this is just the top, the tippy top of the pyramid in which we all find ourselves, because all of modern finance operates in the exact same way. It's the same fractional reserve scheme, except the only difference is that when the big boys and the commercial banks, when they go bankrupt, the Fed prints more money to bail them out, whereas nobody printed more Bitcoin to bail Sam Bankman-Fried out. And so when we zoom out and we see the entire structure of the pyramid itself, what is going to happen in the end game? The same thing that happened to FTX. There was a bank run there, and then whoever it was that had access to the keys stole all the cryptocurrencies and put them in their wallet. And then the FTX firm itself collapsed. What's going to happen to the entire pyramid? Well, since it's based on treasuries, when there is a run in the treasury market and anyone who owns treasuries sells all at the same time, the Fed buys them all. And then meanwhile, the people in the know stage a run on the core of the pyramid itself, which is, of course, gold and silver. They drain all the ETFs, they drain the COMEX, they drain it all, and they put the gold and silver into their stacks. So basically, we are the guys putting the money into our accounts by buying gold and silver. We are draining the pyramid before it actually collapses. And by the time it does collapse, hopefully it will be empty and we will own all of the actual money, the metal on which the entire pyramid is based. Now, here's a little history lesson for Sam Bankman-Fried from Daniel Oliver of Mermicane Capital, and a research note that he wrote a few days ago, 2 days ago, I think, on his obliviousness to monetary and financial history. He writes, the public's attitude toward Bankman-Fried when he was still living in the Bahamian estate brings to mind the obsequious behavior towards John Law, progenitor of the Mississippi bubble. This was back in 1720, 302 years ago. The roads to his house were jammed with carriages of the highest nobility, begging an audience. Several of the best families in Europe sent their sons to propose marriage to Law's 8-year-old daughter. The public would shout, "Long live Mr. Law," when he passed. He's such a philanthropist, Bankman-Fried. Let's all go to his Bahamian house and prostrate ourselves at his idolatrous temple, fractional reserve nothingness. All of this would be new information to Bankman-Fried. He boasted to Sequoia, the firm that was fawning over him and writing all these puff pieces. I don't want to say no book is ever worth reading, says Bankman-Fried, but I actually do believe something pretty close to that. I think if you wrote a book, you fucked up, and it should have been a 6-paragraph blog post. And so another Ponzi fails by another ignoramus who has no idea of what money is. Very simple stuff here. This is the technical update on silver. This is the daily chart. You see here that we have broken through the 200-day moving average, the 200 DMA, this red line over here. We've been testing it for the last 1, 2, 3, 4 days. We could break below it a little bit and have a little bit of a correction, but this is the first time that we've bounced through the 200 DMA in quite a long time. I didn't look at the entire chart here, but let's move on to the next one. This is the weekly chart. Aside from the 200 DMA, we've broken through the 200 weekly moving average and the 50-week moving average, which we are hovering against and coiling against right now. Let's see if we can break through it for good this time. The last time we did, we failed that eventually and hit a new, looks like triple bottom over here, but we're headed back up now. Let's see where this goes. But in truth, what I'm more interested in looking at and seeing is if the increase in the spot price of silver causes a reversal in the flows from the COMEX. Hopefully, these will continue to trend downward. And so far, the drain has paused, but it is not reversed. And here, where I marked this September 1st, this was silver's bottom at about $17.40 or about there. And since then, we've seen the silver drains continuing from what looks to be about 53 million ounces to about 35 million ounces registered. And so as silver has risen from about $17.40 to about $21 an hour, $21.50, the drains have continued. So there is no reason to believe that the drains will reverse at this point. Silver is still very underpriced, undervalued, and so the drain should continue. It has slowed down, but I think that it will continue in the weeks ahead, maybe at a slower pace. We will have to see. And this final chart, this is the spread. And I mentioned this on the Endgame Investor, the spread between the 30-year mortgage rate and the 30-year treasury yield. You see, these rates are supposed to be more or less the same, maybe about 100 basis points difference on average. Money loaned to the government for 30 years versus money loaned to a private house buyer for 30 years is 305 basis points right now, all-time record high in terms of the difference, the negative difference. And the last 3 times we saw lows like this were in 2000, which was the gold and silver low of the 20-year bear market up to that point. And here we see the 2008 financial crisis. This is when gold and silver reversed again at this low. And the 2020 financial crisis spurred by the shutting down of the world by the wisest people on the planet ever to lead us. Now we are way below any of those lows. So what do you think is going to happen? Logically, what is this portending? Well, if banks are willing to lend money at 305 basis points lower to the government than they are to real estate owners and investors, and that means that banks are anticipating a final pivot and anticipating that these bonds that they're buying will go up in value as yields fall, but they are not anticipating the same thing for housing prices. And the final chart I want to go into is this one from China. Consumer prices in China are not rising nearly as fast as they are in Europe or the United States or anywhere else in the world, pretty much. Officially here, they're at about 2%. How is this possible? It's very simple. When Europe embargoes Russian energy and China buys it at a huge discount, they can keep their consumer prices very low. And so this seems to be a willful suicide by the European Union. Whether they realize it or not, I really don't know. But it seems that they will continue this policy until either the Europeans revolt in the street or the currency itself completely collapses and they lose power anyway. And so in conclusion, we are trying to hollow out the pyramid before all the gold and silver inside of it is looted by the people who have been stealing money from everyone for the last 40 years and more. If we don't buy it now, they are going to buy it just before the entire pyramid implodes. Thank you to everyone who's signed up to be my patron on Patreon, where you get a weekly video on biblical commentary on monetary and economic policy topics. The next one I got coming out is, what do the city of Sodom, and Ayn Rand have in common? And yes, I am an Ayn Rand fan. And of course, if you haven't checked out the Endgame Investor yet, you can sign up for a free 2-week free trial. Free 2-week free trial? Yeah, that's redundant. Now is the time. We're running out of time. I don't know how much time left, but it's always less than it was the week before.